All right, for today, we start a new chapter, which is always exciting. Chapter 4, job costing. And I also wanted to ask, on the exam, how do you think? I didn't feel too good about it. And I'm not blaming you guys, I'm blaming myself. Most of the points lost were on
Multiple choice.
the words.
Vocabulary.
Yes, the vocabulary. So I've been concentrating so much on the numbers.
Well, that's the important part.
I know. That's the more fun part, right? I'm a little concerned about comprehension of the words. Like fixed cost, everybody put down it stays constant, right? But that's only in total. On a per unit, what does it do? It's inverse, right? If production goes up, my cost per unit comes down. And if my production goes down, my cost per unit goes up. So a lot of us missed the per unit in the question. Most of you thought it was total, and that's how you responded then. So it was things like that just be careful, I guess is the thing that I would like to mention here. When you're reading those multiple choice questions, don't read them too quickly, I guess. So
it's like a lot of pressure on you.
yeah, I understand that, yeah.
That's probably why it's good.
Yeah, that's always the case with the exam. Things are different, right? I did go through the exams. I did add back some points. Not for everyone, but some that I felt that, yes, that would be an acceptable answer, like the relevant range one. For those that had that one, I added 2 points there. And then there was the problem with, it asked for the contribution margin, and a lot of us forgot in the variable statement, the margin has the reduction for variable selling and expenses. So that too was added on a lot of those that were, you had everything right, you just forgot the 85,000 of selling expenses that were variable in that margin definition. Contribution margin is sales minus all variable expenses, production, and selling and admin. So that was another thing that I had. And with the extra credit, that helps some of us, most of us that did it. Please also know that there was the tricky problem with the matching. Yeah, that was hard. It had the absorption statement, variable statement, or both, or something to that effect. Yeah.
I have those.
A lot. In some cases, you don't have to attach it to every one. You didn't have to use. Both was the predominant, because both includes the variable selling, it includes the fixed selling, it includes. Yeah, that's the one that was really kind of tricky. I'm not saying I won't have any more like that in the future, but that was probably the toughest one that you'll see with regard to matching. If you, again, it's only one exam, we have lots of them. So there's lots of opportunities to make up the points. Continue your homework assessment. And we should be fine. So just be aware. So for chapter 4, right, we have our due dates. And I want to just briefly say that today there is that concept clips. Again, those don't take long to do. So make sure, even at break, if you want to do those concept clips, or if you're tired of listening to me, do the concept clips so it's done, right? And the next due dates are March 11th, which will take us basically up to spring break here. We will get started with chapter 6 as our next chapter after 4. We jump 5. 5 will be in your managerial class. The problem for chapter 4, which is 55, is a TSA problem. So in other words, you have to get greater than 77% on it. So cost is got 4 of them, 4 TSA style problems in it. Because again, when you graduate, we have to prove that you understand what job order costing is about. It's just a state requirement.
Oh,
Yes.
it's a state requirement.
State requirement that we assess this, that we make sure our students, when they leave here, understand this concept. So it's going to be imperative that if you are struggling with this problem, problem 55, that you contact me, and or don't wait till March 10th to start it. Please do not do it. It's not a long problem. It isn't. It really isn't. But again, you don't want to wait till the last minute to start asking questions. That's not the purpose here. All right, we good on due dates? Requirements? All right. For chapter 4, it begins on page 149 of our book. It is, I feel, the second best chapter. Chapter 6 is my favorite. But chapter 4 is my second best chapter as far as being able to do a lot of number crunching. It is a job order costing system, and also we're going to talk about another new concept, applying overhead. So if you remember, we have 3 parts to our product cost: materials, labor, and manufacturing overhead. Well, we're going to basically apply that overhead to WIP. And how do we do that? The course, the chapter company profile is Washburn Guitars. Anybody play guitar here? No? They are basically a made-to-order guitar manufacturer. So an artist comes in, they want this style. It's a unique type of product that they make for them. And a lot of companies in our area are job order cost systems. Mechanics, auto repair shops, landscapers, right? A lot of jobs are done for a specific customer. So that's where this fits into place. When I left public accounting, I worked for a company that manufactured laser parts and weldments. So they were all job order costing. A lot of machine shops in our area in Green Bay use this system. So the book starts off on page 150 with a comparison of job order to process costing. You will have to know the difference between the two and identify what companies would use which system. So chapter 4 is here. That's what we're talking about. Chapter 6, which is our next chapter, will be process. And on page 150, they go through some examples of job order costing. And really, for the author, it's got to be unique, one of a kind of thing. Furniture making, if it's custom, not the mass-produced one, right? Or printing by customer, basically, whatever the requirements are, they would use job order costing. The opposite is mass production. Like Procter & Gamble, making toilet paper rolls. Right? They would use process costing. And we have some of our students working there in their accounts payable department, actually. We're still coming up with our goal, right? How much does it cost to make one? Cost per unit. It doesn't matter whether we're using job order or process costing, our goal is still the same. Dollars over units is our goal in cost accounting. And they have a nice table here. This is on page 151. Just understand what homogeneous means. The same, right? Homogeneous means they all look the same versus a variety is for job order costing. And you can read on your own then, guys, those differences. But let's do our first example, identifying which accounting system, job or process, this type of company would use. So we're going to just go around the room, and some of them, again, have a gray area. Okay, you could say yes to maybe either or, but we'll try to identify those and make comments on those when we get to them. Starting with the hospital, Kershaw, would they use job or process costing?
Job.
Yes, very much so. Each patient, right, has a specific type of service. They certainly would use job. Tom, custom cabinet making.
It'd be a job.
And what's the key word in this sentence?
Custom.
The word custom. If it said mass production or mass produced furniture,
Yeah.
like the ones at Walmart, then that would be process. Toy manufacturing, process. Unless we're in Door County and they make those cute little wood toys, it's pretty much process, right? Going over to Ruby soft drink.
Job?
This is more
Process.
likely
Okay.
process, yes. Think of Pepsi, right? Think of
Okay.
Coke. They're making the same product year-round. Michelle, this is where that gray area is. What-
Job.
Yeah, very good. Yes, I agree, it's job. Even though it's the same model, right? When we look at an airplane, like Boeing's airplane models, those are specific to United Airlines, American Airlines. They have certain requirements. Even though it's the same type body frame, a lot of differences between the two. So therefore, it's unique. I would call this a unique type of product.
I have a friend who used to manufacture like the little parts for it, and she's like, there's so many different forms for each plane she had to do.
Yes, and they have to track that. You have to keep paperwork on what material you use, who inspected it. Yeah, very stringent working for the airline industry. Great comment. Over to you, Liz. Personal computer assembly.
Job?
Let's assume, this is a gray area again, let's assume that we're talking your iPad that you buy from Best Buy. Then it's going to be
Assemble the same. It's a process.
assembled the same. Now, Liz is not totally wrong. A lot of places you can buy a custom one, right? With some additional parts that you want in this computer, then it would be a job. But in this case, when it says personal, I think they're looking at mass-produced type computers, not specific to one person. All right, Teresa, you're up.
I'm thinking this one is process.
Yeah, and a key, if they're sold at like Walmart discount stores, they're making the same one, no difference, right? Not unique. As opposed to Tom, custom,
That would be job.
That would be job. So that's the difference between process and job. Custom means it's unique, one of a kind, built to that customer satisfaction. To Polly? Pardon?
Job.
Job? Excellent. Very similar to hospital, right? Go in as a patient and you have something unique done to your teeth in this case. I'm going to jump over to our Webster's. Austin, you're up. Can you tell me for paper manufacturing if that's process or job? Austin, are you there? Can you hear me now? Well, Austin, let's try. Diane, are you there? Can you hear us? Process or job? Very good. Is that the answer? Is that the right answer? Yeah, very good, process. Sam, how about nut and bolt manufacturing? Very good, Sam. Excellent. Process. Austin, are you still there? You can turn your mic on too. It's at the bottom of the screen here. I think he went shoveling snow. Or maybe he's...
Yeah.
Oh, did he respond here? He might have.
Don't know. Let's see it.
See, Gary, you're messing this up here.
Oh, he's not there.
Oh, he's not there anymore. Oh, Jade's here.
Where did he go?
Oh, Diane just answered under her name. Jade, welcome. You're the new you're the new Austin here. Austin went away. I'm looking at whether auto repair is a job or would they use job order costing? I know you came in late.
Oh, she answered.
Or process. She answered already?
I think so.
I hear it too.
She's quicker than me? Yeah, job. Very good. Excellent, guys. Thank you for helping me. Architectural service, I'm back to Kershaw. Yep. Tom, landscape.
It's a job.
Yep. And Yi, flashlight.
Process.
Very good. So this will be on the test. You'll have to identify what type of costing system that this particular company would use.
What about those gray area?
Gray areas, you won't have too many, you won't have them on the test.
Okay.
It'll be pretty clear. It'll say unique, one of a kind,
Okay.
custom, that custom word. Be watching for those type of words. And it should be pretty straightforward.
Okay.
All right. Now, new concept, new terminology here. It's called normal costing. This is on page 152. Whether we're using job order, whether we're using process, most companies, 99%, have some kind of application of overhead. And it's under this normal costing that we're going to start now defining how to apply overhead. So I'm going to just put this here. And where are we applying it to? We're applying it to our WIP account. Our WIP account. Work in process inventory account. The author calls this normal costing, and it's opposite of actual costing. So actual costing is the actual cost of direct materials, labor, and overhead. And normal costing replaces this actual overhead with an estimated overhead. Estimated overhead. Remember, think of a company making parts or an auto repair shop. Do you think they can wait for the utility bill, or can they wait for their supplies expense bill to come in before they can bill a customer? No, they got to do it immediately. So that's the reason why we're going to use an estimate for overhead to figure out what that bill is going to be to that customer. So that's the goal here. And the author talks about the speed process. You can't rely on actual costing, because we got to get that to that. I don't have it here. Speed is an issue. That's a very bad word called issue. I can't even read that. And when I talk about speed, I'm talking costing information. We have to get that immediately. We can't wait for the utility bill or some of these other bills that come in at the end of the month. We might not get that bill to the following month. So that's a problem. Also, I don't want to talk about defining. I want to talk about uneven overhead. During the year, think of what we're looking at now in winter. If we made something in January with the utility bill being extremely high, well, would we make that same part in July when we don't have this huge utility bill? My costs would be totally different, wouldn't it?
Yes.
So I can't charge somebody in January more money for the same part I'm making in July. So here again, this application of overhead makes this level throughout the year. Makes this overhead amount level throughout the year. Also, remember with our fixed cost, right? If I make more, my cost per unit comes down, right? So in January, if I made 10,000 units, I can't charge at a lower price than in July when I made only 5,000 units. So again, with accounting, with everything that we try to do, we try to keep it even, right? Keep it steady. And our customers also demand that too. We can't charge more in one month versus another based on something that we're doing internally. So, unless you're a very small company, actual costing is out and normal is in. We still have three parts in WIP, right? We have actual direct materials, actual direct labor, and now what's new, it's still overhead, but it's an estimate. Is it actual? No. So at the end of the year, guess what we're going to do? We're going to reconcile. We're going to convert the estimate number to an actual number at the end of the year. It's called closing this over or under applied amount. And on page 153 now, why is unit cost important? We got to charge it, right? We got to somehow determine the value of our inventories, right? And how much is going to be on what? Our cost of goods sold. So cost of goods sold is the end of our product cost. That's when it's expired. That's when we get our expense recorded on the income statement. So critical that we get this cost per unit as accurately as we can. It just talks again of the importance of unit cost. And when they talk about full cost here, they mean the three. And I'm going to start using now, instead of overhead, applied overhead. Applied overhead is our third component. And remember that with overhead, it includes both variable and fixed costs.
Wouldn't that be direct labor
Yeah.
plus direct manufacturing?
I was just testing you, Tom. I think I said direct labor, I just didn't write the
Yeah.
L instead of an M. Good catch, Tom, thank you. Okay. Service firms. This, we don't touch on service very much. This is on 153, 154. And unit cost is still important to them. So we're talking hair cutters, right, beauticians. We're talking I'm just trying to think of some service. Restaurants, so to speak, are considered in this area. You don't store food inventory, right? So those type of industries also require this important cost, unit cost information. And remember, with service, there is no work in process for finished goods. So you're looking at your labor, you're looking at your materials used to cut hair or whatever, you're looking at the overhead for the building that you're in, the chair that you're in. Those are all rental fees maybe. Those all have to be added up and estimated, right? So we've got to figure out what our cost is before we can start charging. So it's just a discussion on a different type of industry. Okay. On 154, ethical issues. As accountants, we get banged here quite a bit. At least once a year, you hear some of accountant did this. So that's why you take the ethics class, right? But the book talks about marking up cost by 60,000%. I don't even know how that would even be possible. But basically, that's 600 times their cost. Well, that's an ethical problem, right? And if you noticed in the news yesterday, the pharmaceutical companies were sitting at Washington trying to say, this is why your drugs cost so much. Well, this is that ethics issue. What is too much, right? How much markup is too much? And so it's real life things. Again, you have to have a reason as to this percentage that you're marking up your costs by. It's not an easy decision, but again, just keep that in mind. And remember, with everything, if you get too carried away, who's going to be involved with the government, obviously, for in this particular case, for the pharmaceutical industry. So just keep that in mind as you go through the book. Now, we get to the process of coming up with our estimated overhead. 3 steps, pretty straightforward. Here they are. Come up with a predetermined overhead rate. Number 2, apply that rate to WIP throughout the year. And since we're using an estimate for overhead, we've got to reconcile that difference at the end of the year. We're going to compare our estimated overhead that we've used and put into WIP, and we're going to compare it to our actual overhead. Three steps. The first step is the hardest. Not for you, we'll give you the numbers, but in real life, it's extremely difficult to come up with a rate. So we'll talk about that once we start doing some problems. Now, this estimated overhead, a new term here, is called predetermined. Look at the word pre. Predetermined means before year starts. I work with a client right now. Every year, we sit down in October to determine what that next rate will be for next year. It takes us about a month to get that rate. Okay? Because we got to make sure our estimates are right. We got to look at our activity level, what we expect for sales next year, or production levels, because that will influence it. And there's so many accounts. Look at your overhead. There's utilities, there's supplies, there's supervisor salaries, there's janitors, there's maintenance, there's repairs, there's workers' comp insurance, right? Lots of insurance, general liability insurance, payroll taxes, right? All of those are overhead items. So it takes an extreme amount of effort to get that rate. So, how do we begin? Step one, it's a simple division. This is on page, same page, 155.
154.
Still.
Somewhere on there, 154. Remember the word pre, right? Before the year starts. That's why we got to estimate. What will our overhead dollar cost be for all these accounts, right, for the next year? This is where it's difficult. That's extremely hard to figure out. Second, activity level could be machine hours, could be direct labor hours, could be direct labor dollars. In fact, your problem, your 25 TSA problem, they base their overhead on the amount of labor dollars. So if my labor is $1, it's a percentage of that dollar. 50%, 50 cents is my amount of predetermined rate for overhead. So we'll do some problems with all of these as the bottom number. Again, it's an estimate because it's pre. I have to determine how many machine hours, and I do this, how many machine hours do you think we're going to have in this department? I do it by department. 1,000, 2,000. There's 2,000 hours in a year. I run a double shift, so now I'm up to 4. I run lights out another shift, that's the third shift, so I get another 1,000 there, so I'm up to 5,000 for that machine. If I can sell it, right? Not like GM where they made and didn't sell, so that's where they ran into trouble. All right, so 2 estimate numbers, and again, it's all overhead, right? And there's just some examples here. And I do use last year's figures, right? But we have to adjust for what's changing. What's changing? Next, step 2, once I have the rate, I'm going to use that rate and apply it against the machine hours or labor hours or labor cost, actual number. So this is where it gets confusing. Gary, you told me it was estimate. Yes, the estimate is used to get the rate. But in step 2, when I apply it to what account? If you're following, what account am I applying to? WIP account, good, very good. When I apply it to WIP, then I have to use the actual activity level. So if my predetermined rate is $2 per machine hour, and my actual level of machine hours is 1,000 for this period, or this job, I'm gonna have $2,000 going into WIP. I add it to my material, I add my labor, and guess what? I have a total cost. Once I have a total cost, what can I get? A unit cost, which then I can sell to ye at a markup of what? Something. That's why we're using this predetermined rate. I'm not waiting for the utility bill, which will come in March, for February. That's too late. My customer wants that bill right now. Plus, with job costing, I bid every job before I even start. Look at the roads. They bid that project before the state of Wisconsin says, yes, you can do it, right? You live and die by the bid. So here again, that's why we need this normal costing. All right. I think we got the concept. Here's exercise 1. Very straightforward, but I want to look at the layout. Here again, I want you to get comfortable with looking for what you need to do, right? So, in example 1, they present the estimate information first. The actual information is sitting in the sentence. So take a moment and read exercise 1 for me. Talks about the estimate before the year starts, right? What's that going to be used for? To come up with what?
A rate.
Our predetermined overhead rate,
Yeah.
step 1. You need this for step 1. Every problem for this chapter, you have to do step 1 before you do anything, which is to come up with that predetermined overhead rate. So many times. Now the author will trick us. They might put the actual information first and the estimate down below it, right? They mix them up. Why do they do that?
Just so we know what we're doing.
So you have to be sure you know what you're doing, exactly. Look for that terminology, beginning of the year, it's an estimate. So look at how they did the step 1 computation. The overhead dollars is always on top of that computation. Don't put the labor dollars on top. We're not doing it per labor dollar, we're doing it per overhead dollar, right? The denominator is the activity level.
Where did you put dollars? I don't know that.
Well, this activity level is based on labor cost.
Oh, okay.
This is your 25-point problem in a nutshell. The first questions it's going to ask on your 25-point problem is, what is the predetermined overhead rate? And I get constantly where students reverse it. They put the labor cost on top, overhead on the bottom. Don't get tricked.
Yeah, it could be confusing because it's a
Very
dollar.
confusing.
Yeah, dollar over dollar amount.
Now, normally, if the problem gives you machine hours as the activity level, right, it's not an issue usually.
Yeah.
Or labor hours could be another one that you could use here as the activity level. All right, then it goes on to step 2. I'll change colors here, where it uses the overhead rate, which is saying for every dollar of labor, I need to apply 50 cents of overhead. For every dollar of labor, I'm going to have 50 cents of overhead. And what is the actual activity level for the month of February? It was a labor cost of $56,000. So when we get to step 2, what changes? I have to use an actual number of something. That's how I apply it to a job. Is how many hours did we spend, or how much labor cost did we spend on that job? If I have more, guess what? I'm going to get more overhead. Doesn't that sound fair?
Yes.
If I spend less cost or activity on it, I have less going into my WIP. So that's how the application is done. That's step 2. I've been talking a lot. Any questions?
No.
Are you excited for the new opportunity to do this?
Yes.
I'm excited to try it. Shall we try it?
Yes. Let's do it.
Awesome. Let's see how this works. We'll worry about step 3 later. I'm not too worried about that. Go to problem 39 in your packet, please. Is that the next one? I hope, I pray.
Yeah, looks like it.
Good. Page 2, guys. We'll do step 1 and step 2. And make a journal entry. Oh, that's always fun. 198 of our book. Just take a moment before I begin. Sometimes I rush. I get so excited I rush into the problem. But I've seen the problem before. You have not. Take a moment, read the problem. I want to do step 1. There's 2 numbers I need to get. Where do I find it? I want to do step 1. Diane, what 2 numbers do I need to get this overhead rate, this predetermined overhead rate?
Can you hear me?
I can hear you now.
Okay. 582,400 divided by 80,000.
Awesome. That's exactly right. Perfect. And what amount did you get, Diane?
Again?
How much, what was the rate? What was the
Oh, 7.28.
7.3?
Is it 28 or 30? Or are you just rounding?
It should be 28, 7.8.
2.8?
28.
Is that rounded then?
Oh, it's exact.
It came out exact?
Yep.
On some of your problems, you will have to round it to the nearest cent, which is 2 places, right?
All right.
Also, everyone, please identify the driver. In this case, it's per direct labor hour. Again, with the bigger problems that you're going to see, some departments are labor hours, right? Other departments use machine hours depending on their activity levels that they feel is better to apply the overhead rate by. So when students don't identify the rate with the driver, they use the wrong number when they get to step 2. They're multiplying the 728 times machine hours, when no, that's not the driver for that department, it's labor hours is the driver. Does that make sense? Start getting in the habit to identify the driver with the rate. Okay. Step 2. Calculate the applied overhead for the month of January. So when you see the word apply, we now have to look for an actual number. What actual number in problem 39 do we find?
6,950.
The 6,950. Does everybody see that? That is correct. So actual hours, 6,950 times my predetermined rate of 728 per direct labor hour gives me how much?
50,596.
50,000?
596.
Excellent. So we got step 2 done, right? Let's make our journal entry and then we'll take our first break. What is the journal entry? What am I applying it to? This? You shouldn't have looked up because then I knew. What do you think? Where's the overhead going to, Liz? Which account? Not sure? Oops, somebody answered.
Work in process?
Work in process, inventory, yes, yes. Thank you, guys. Thank you, Jade, excellent. So, if I'm putting it into work in process, what am I going to do? Debit or credit? Debit, right? Because it's going up, it's an asset, right? Job number 1. I'm not sure. It's not, they didn't identify. I'm making that job number up. But in chapter 5, we're talking about job order costing, right? You do this, or the computer does this in the background. For every job the company's working on, they're based on the labor hours, right? Labor hours, so much, $7.28 is going into WIP. So I'm going to put the 50,000, I'm running out of room, 596, debit, and I'm going to credit a new account. I think the author uses overhead control. It's a temporary account. And if you look down here, there's a T account, right? This is the overhead control account. Overhead control. And I'm going to put temporary account on here. And temporary. So do we ever see it on a statement? No. It's not there. It's like income summary, right? You never see income summary on a statement. It's just there temporarily, holds our information for the year, and at year end, guess what? It becomes 0. So we're going to use this temporary account to reconcile, right? Reconcile our estimate to actual. We can't send the IRS a cost of goods sold amount with an estimate number in it. They kind of frown on that. Okay? Same is true with Wisconsin Department of Revenue. They would not like that. Nor would the bank like that.
They'll come after you pretty quickly.
That's that ethics thing, right?
Yeah.
Right? We got to be as clear and precise as we can possibly make it. All right. Now, I'm approaching step 3. This reconciliation is step 3 in our 3-step process of normal costing. But let's take our break here. We'll stop here at this moment. We'll do step 3 when we get back. I'm just going to put my number here. I don't like journal entries out of balance. So we're good. Let's stop here, take a break, and we'll pick a start. Here we go. Step 3 was on page 156 of our book. And it's the reconciling of actual overhead with the applied. So we're going to compare the $2 amounts, come up with a difference, right? And cost doesn't use the word difference. That's for other accounting courses. We use variance. Variance is the word. And sometimes that variance, that difference, is either over or under applied. So on the exam, you will have to not only compute the difference, that's the easy part, but then tell me, is it over applied? Did we put too much into WIP? Or did we put under applied or too little into WIP? So they do a comparison here. We have actual overhead of 400 for the year. We applied 390. Actual was 400. We applied 390.
Here, I got a quick question. When you over and under apply, what does that do to your accounting process?
Ah, yeah. Let's just get to your question.
Okay.
Here's where my T account, we'll compute the difference and then we'll get to your question.
Okay.
So I have actual on the left. Think of the journal entries. I get the utility bill, right, for the month. I debit this control, credit utilities payable, or accounts payable, right? Or if I have depreciation for my equipment, I debit what? Not depreciation expense. We're in cost. Let's assume the equipment is manufacturing. I'm going to debit manufacturing control and credit what for depreciation? Accumulated depreciation. Very good, right? Does that make sense? Or if I have insurance expense, I don't use expense, I use manufacturing control, debit, insurance payable, credit. Or salaries expense, instead of expense, I'm using manufacturing control, salaries payable, credit. Are we on the same page?
Manufacturing control.
Everything's manufacturing control if it's what? Product cost related, right? If it's in the selling and admin, then we start using those expenses like you do in the intermediate.
Okay.
That make sense?
Yes.
Right? I want to make sure you have to tell me. Remember, I work for you, right? You paid for this class. I want to get your money's worth. Accountants, we like to get our money's worth, right? Yes. Ask questions. My son has a requirement. He has to ask 2 questions of a teacher during the week. In this one class, math. He doesn't like math. Shocking. Shocking. He does not like math. He's not a math person. Not a math-
Artistic?
Yeah, I guess so. I'm not sure yet, Tom. That's still out on the old. Applied is on the right side. So think of the journal entry here. We just did it. We debited what? We debited work in process for the applied amount. We credited the manufacturing control account for $390 in this case. What's the difference, guys? $10,000. That's the easy part. The question is it over or under applied? It's under, right? I didn't put, if you look at my applied here at 390, I didn't put enough into WIP than I should have. So this is under applied. So on your multiple choice questions, the choices will be 10,000 over, 10,000 under. You got a 50-50 shot at it. But you gotta make sure you get the right 50, right? That's 3 points right there, if you get it backwards. I love T accounts. This is a great opportunity to use them, to make sure that you get that in the right direction. Including what? Guess what? I gotta make the journal entry to get this to what? 0, right? As part of the reconciliation process. How do I get this manufacturing control account to 0? What do I have to do to this account?
Credit 10,000.
So here's my adjusting entry. I got a credit because I'm on the right side, correct?
Correct.
And I'm going to debit for $10,000 cost of goods sold.
Why does it go to cost of goods sold?
Why does it go to cost of goods sold? Think about what happens in our flow of cost. It goes in the WIP, then it goes where? When it's completed.
Finished good.
Finished goods. When I sell it,
Cost of goods sold.
cost of goods sold. That's
Okay.
why we're debiting cost of goods sold in this case. So you will be asked, if I need to make a closing entry to reconcile this difference, if it's under applied, what does that do to my cost of goods sold? If I debit the account, what is cost of goods sold doing? Going up or down? Polly, I think said up. I was reading her lips. Good job, thank you. Yes, it's going to go up as a debit. It's an expense, right? Cost of goods sold is an expense type. Expenses are debited, they go up. If it's over applied, guess what? It's the opposite. I'm going to credit cost of goods sold and debit manufacturing control. If I credit cost of goods sold, so this is going up. If I credit cost of goods sold, it's coming down. Remember in intermediate, you have an unadjusted balance?
Yes.
And then you make your adjusting entries, and then what you have left is a adjusted trial balance. This is that part of that process, is to get it to an adjusted trial balance, getting my cost of goods sold to not a fake number, but an actual number, right?
Right.
Now I'm back in business. Also be aware the author talks about debiting or crediting cost of goods sold only when it's immaterial. In cost accounting, what does immaterial mean? Is that definition thing again? What does immaterial mean? It's the opposite of material. Now, we're not talking materials, we're talking what? If it's immaterial, it's small. It's like little, not much. It's immaterial. Does that make sense? If it's material, it's large, right? So if it's a small difference, and they're considering the $10,000 to be a small immaterial difference, it's going to be debited or credited to cost of goods sold. Can I have you turn to page, I'm guessing now, 157, 158, I believe. I want to make sure you spent money on that book. I want to make sure you use it. Oh boy. Oh, it's 157. Did I say 157?
157, 158.
Under example 4.2, please read that little paragraph. That little paragraph is on the test. Everybody see it? The little paragraph, it says
Oh, if one.
if overhead is what?
Variance is material.
Material. Now variance is difference, right?
Mhm.
Material means what? Large difference, right?
Mhm.
What does it say to do?
Another approach would be taken.
And we're going to allocate. What does allocate mean?
Spread out.
Spread out across which accounts?
With finished good and competence of
What? Instead of one account, I got to spread that allocation across 3? Yes. Why across those 3? When does my estimate of overhead hit the first account? It goes into what? Work in process. That estimate also goes into finished goods, right?
Yep.
And then eventually gets the cost of goods sold. So if the amount is 100,000 instead of 10,000, guess what I'm going to have to do? I'm going to allocate it across all 3 because all 3 are fake. They're not real numbers, right? Our fake overhead applied amount is in every account. So I got to fix them all. If it's small, big deal. I mean, 10,000 on a $1.3 million company, not a big number. So then we can just put it to 1. It's easier. You need to know that little paragraph for the test. That's the only time we mention it. It's the only time. Clear as mud? Does that make sense?
Yes, it does.
Ask a question. You know I get paid by the question. I'm on commission, you guys. Exactly.
Okay, which paragraph are you looking at again?
That's fine. Michelle, I'm on page 157,
Okay.
after the example. Wait, right where your finger is.
This little,
That little paragraph, that's 3 points. Maybe 4. Maybe I'll make it 5. Just so that it's an emphasis. On a prior edition, we used to allocate across those 3 accounts. So you had to do a journal entry if it was immaterial, and you had to watch for it. Or, if it, I would say it was material, then you'd have to spread it across those 3. Now, this edition doesn't require that. But I will ask the question, okay? All right, watch for that word immaterial, and I didn't spell material right. Come on. Who's my math or spelling wizards? I wish it had autocorrect sometimes. My son relies on autocorrect. Oh my gosh. I get so excited sometimes I just don't write all the letters in the words. All right. So let's go back to our problem 39 and see if we can tie this into the words, right? Oh, isn't this pretty? I like the colors here. It makes sense, does it? If my actual overhead is more than my applied, I'm under. If my actual overhead is less than I applied, I'm over. Right? That's the name of the game. All right. That's page 156 if you wanted to know. Exercise 2, for example, 2 shows that over or under, and then how does that affect our cost of goods sold? In this case, it was under, right? So that means I have to add it to my cost of goods sold. I didn't put enough in, so I gotta boost it up for my actual overhead. Am I feeling the love on this?
Soaking it all in.
You're soaking it all in. Okay, let's try it with 39 here. So, for question 3, they switch gears a little bit. Remember, we applied for just 1 month, January, right? Just 1 month. Now for question 3, we're at the end of the year. That's when we reconcile, right? So at the end of the year, it tells us some information. So I have my temporary account. What side does the actual overhead go on? The left side or the right? What is the actual overhead? Maybe I should start that. I need the dollar amount. What did you say, Dipali?
50,596. Actual.
That was just for the month of January, and that's the applied amount, actually. It's not the actual. I'm looking for the year.
The 613,000.
Does everybody see that? 613? 320? That's the amount for the year. So, throughout the year, I'm getting those utility bills. I'm debiting the manufacturing overhead, crediting utilities payable or accounts payable. In the tune of 613,000,
320.
320?
Yes.
Now, throughout the year, I'm applying overhead on the right side. So I'm debiting WIP, job number 1, job number 2, for every labor hour incurred on that job. And I'm crediting, right, my overhead control, my manufacturing overhead control. Now, what was our rate?
28.
728. And what I'm going to multiply this predetermined rate by?
8,400.
80,000, Ruby?
8,400. 8,400.
84,100.
Yeah.
84,100. Why did you pick that number, guys? What is this number?
Because that was a direct labor hours.
Actual, for the year, right? That's so important. It's not estimated hours that I'm multiplying by. When we're getting to step 2, we have to find the word actual. All right? In dollars, how much is this?
7,000, 612, 248.
Oh, you have to help me out.
612.
1,248.
Yep.
Excellent. 612,248. Okay. What's my difference? This is step 3. How much, Heath?
1,072.
I need a new color. I'm tired of this color. Now, I was messing around and I totally forgot what you told me.
$1,072.
Okay. Do you feel that amount is material or immaterial?
Immaterial.
Yes, I agree. And we call this not a difference, what do we call it? What's the term?
Variance.
Variance. Okay, good. So, we've already figured out the variance. Is it over or under?
Under.
And the answer is it's under. Yep. I didn't put enough into WIP. Not enough went into WIP. So here's another example, just like the book example, where I'm under applied. So I'm going to put that here also. Under applied. Tom, I'm not quite to your question yet, and we'll get there. Are we good so far? All right. Now, we need to calculate this. Our adjusted cost of goods sold. We are presently at what amount?
$927,000.
So at the end of the year, we ran our trial balance with before adjustments. This is the unadjusted balance in our cost of goods sold account, right? We're going to make our adjustments and get it to a adjusted balance at the end of the year. And this is what we report on what statement? This is the account name, cost of goods sold, what statement?
Income statement.
You guys were making me very nervous. Thank you. Right? And sales minus cost of sales gives me what subtotal?
Margin.
Profit or margin. Yep. The number one probably amount that every manufacturer looks at is their gross margin. Okay. So, what's my journal entry then? To close out the temporary account. What do I debit? What do I credit?
You're going to debit cost of goods sold.
Okay. How much, Michelle?
1,072.
Good. And what am I crediting?
And then you're gonna credit that manufacturer, overhead, control.
Yeah, I can't fit it all in there. You're right. You're exactly right. Very good. Thank you. Excellent. Now, if it was over applied, the entry would be reversed, right?
Yeah.
So, if I'm looking at my T account, the left side is what? Debit or credit? Debits. So this is my debit side. This is my credit side. You notice I put the 927 on the debit side. Why?
It's considered like an expense.
It's an expense. It's its normal balance is on the debit side. So that's where it should be. And I'm going to increase it with another debit entry to give me 928,072, which shows up on my official income statement that I give to the IRS, that I give to the bank. Right? Usually the bank gets your statement, unless you're cash rich and you don't need the bank. That is very rare. Right? So that's the end. Okay? Jade and Samantha, how does that look? Okay, Sam? You're good too? All right? I gotta say, this is gold. This stuff is gold. Now we haven't answered Tom's question. Tom, I forgot because I'm old. What was your question? I think it was regarding, is it bad to have this variance or something to that effect?
Oh, yeah, what happened to, like, yeah,
This variance, is this,
what do you do with, something happened to it?
is this bad?
If you like go under or over,
Yeah, it is bad.
yeah.
To be honest, it is bad. Whether it's over or under, they're both bad, right? I would prefer to be over applied. Why is that?
Under applied, I'll just set up a machine and run, they'll set up again.
Well, if I'm under applied at year end, I'm gonna be doing what to my cost of goods sold?
Oh, yeah.
Jumping it up quite a bit. Does an owner like to see his profit go down with one journal entry?
No.
No, right?
Makes sense.
Okay. What's another problem with being under applied?
You must have enough money aside for that.
Yeah. So for the whole entire year, I've been billing Yee, and I've been billing Liz and Walter here way too little. I didn't have enough cost. Remember, I mark up my cost 40%. If it's a customer I don't like, they're going to be marked up 60, right? That price is deflated because my costs were deflated. Huge problem. Lost profit for every job I did throughout the year. I can't emphasize how important that is. So guess what, guys? There's a lot of stress in getting this number right. Because if you're wrong, it's bad, right? If it's a material variance, you are on the hook. So guess what I do? I overestimate some cases my overhead dollar amounts just to be sure I'm covered. But what's the problem with being over applied?
You charge the customer too much.
I'm charging my customer too much, and good old Ruby here, who's a competitor of mine, has it right. And she's beating me on every job that I quote with her.
This is a bid, correct? And
Pardon?
bidding, maybe we're bidding.
Our bidding, all job costs are bids,
So,
99%.
so we want our direct labor overhead to be 0.
We want that variance to be 0 at the end of the year. Yes, that's the goal. Yes.
That's very difficult.
That doesn't happen unless you're that way or somebody, God, that knows everything, right? It's hard. So I've even seen where midway through the year, we're in trouble. We gotta change our rate. There's no, we gotta change this number. I can't keep bleeding,
Yeah,
right?
that's true.
This is where budgets are so important. Because if I'm not comparing the budget number throughout the year to my actual numbers, I don't know if I'm in trouble. It's like playing a game without keeping score. You don't do that. And a lot of companies don't understand this. A lot of smaller ones. I worked for a lot of companies that didn't have any clue about this predetermined rate. It's just in the computer, and we just quote off of that. Well, how'd you get that number? Well, that's what the old accountant had.
Oh, man.
That's scary, isn't it?
That's why they pay that.
Probably they're an old accountant.
That's scary. So this is where understanding the numbers is so very important. You can't run your business if you don't understand the numbers. Even that behavior. What one's variable, what one's fixed. If you don't know, how can you estimate?
How can you be in business? So,
How can you estimate what it would be at different levels of production, right? Very scary. All right. So there's a lot of stress in this number. This is why it takes months to get sometimes. Okay, I'm off my soapbox. You're probably tired of me talking. Let's look at our 25-point problem. We actually can do it after one day. Now we got 2 more days next week to practice this. When is March? Oh no, we got more time, don't we? March 11th.
Yeah, like 2 weeks away. It's March 11th, 2 weeks away.
How come I got so much time on this? Well, that's good.
yeah, we're gonna do snow days.
We got a plan for snow days, that's why. Oh, there's many. We got plant-wide rates, department rates. Oh my gosh, we got lots to talk about. So I'm not worried about having stuff to do. But let's take a look at the problem here.
The assignment on the 21?
Problem 55, the TSA one. I'm going to clear my ink here. The problem's on page 205, correct?
Correct.
I'm not saying that you have to do this problem this weekend. I'm not saying that at all. We're not even close to being ready for that. But I just want you to start looking at it. I'm just fearful that we'll wait till the last March 10th to start it. What is question 1?
So what is the overhead rate?
Yeah. And it should say what in front of overhead rate?
On the basis of direct labor dollars?
Yep, direct labor dollars, but it should say predetermined overhead rate, right? What is the predetermined rate? What I would like you to do is for Tuesday, no, Monday or Wednesday, I got you mixed up with managerial. Monday, tell me what the predetermined rate is using this data that I'm showing now, which is on page 205. In order to answer question 1, you have to use this data here because these are jobs that are already started. These were jobs started in the previous month. We got partway with Carter, Pillam, and Tilson at the end of the month. This is where they sat. We're starting a new month, and we're going to add more jobs to our job list. Yay, we got work. And we need to find out what is the overhead rate. What is the predetermined rate? So using example 1, go to example 1 in our book, because it's the same thing. The driver is the same. Direct labor dollars is the driver. Just like in example 1 on our page 150. Oh my gosh, I can't find it, guys.
157.
157? Oh yeah. Oh, actually 155. Look how if I have glasses. Page 155 in our book is where example 1 is. Okay, so try that. Get started on it. Let me know if you have questions on it. Again, we have some time to do it. So, when we hit the next section here, where they talk about plant-wide rate, again, it's this more terminology here. On page 157, if you get a chance this weekend, please read this chapter. There's not a lot of reading there, but boy, there's a lot of terminology in this chapter. So, looking at plant-wide rate, it's a single one rate. Unless you're a small company, that's pretty rare, where you would have one shop rate for the entire operation. Only smaller companies would do that. The opposite of one rate is multiple rates. So they call multiple rates departmental overhead rates. So this is more than one. So the company I work for has a rate for their laser department. They have a separate rate for their machining department. They have another rate for their press brake department. They have another rate for their paint department. They have another rate for their welding department. Okay? All different departments. Each one has a different rate because the overhead dollars on the top vary a lot by department. Also, the activity level will change by department. In welding, what's a good driver for welding? You're okay, I saw your feet.
Hours.
Labor hours, right?
Yeah.
Wouldn't that make sense? In the laser department, what's a good driver there?
Machine hours.
Machine hours. Exactly. Press brake, machines are computer generated, so obviously I'm using machine hours there. So that's what a company will do, is decide what's the best, if I have more machine hours or labor hours, is that what drives the cost on the top? Remember that?
Mm-hmm.
Is there a relationship between the bottom number to the top number? What were we shooting for?
Yeah, 90.
That's important, because if it's below that, guess what?
We're not very good at predicting it.
Its prediction is pretty much useless, right? Machine hours has no relationship to cost. So guess what? I gotta find a different driver. In managerial accounting, we'll even look at square footage, right? Or we'll look at temperature, or other things. Weather could be a driver. So just some things to think about when we get to that area. Example 3 is the overhead computation for the entire organization using one rate or using department rates. And you'll notice that we have two departments, a machining and assembly, and we also have driver information for both. In the machining, guess what? The driver is going to be machine hours. And in assembly, labor hours. Correct? This is where identifying the driver to the rate is so important. Because when students get to this, they're dividing the 240 by 335. They think they have to add the driver numbers together. Or dividing the 240 by the 135. No, that's not the driver for that department. Do you see how things can quickly spiral out of control?
Yes.
If you don't do step 1 right, guys, step 2 is wrong, step 3 is wrong. So here again, if you have a 10-point problem, if you do step 1 wrong, guess what? It's a big 0. So watch your driver, watch the data. Be careful here. These are simple division computations, but again, we have to be careful, including when we apply the overhead. What am I using in the machine department? I'm using this number, not the 11. We don't add them together ever. And in the assembly department, what hours am I using? The 20, not the machine if they're worrying. And the author will put machine hours even in the assembly. Wouldn't that be easy to do?
Oh, yeah.
And you grab the wrong number by accident?
Mhm.
Certainly. Okay. So here, again, these are estimates, right?
Yep.
And once we're done with the estimate, getting our predetermined rate, we don't care about those anymore. And then we use actual when we apply it. And that's what it shows on the next page here, is how they come up with the rates. They nicely identify the driver associated with that rate for each department. And then they use the actual hours in exercise 3 to come up with the applied amount. And then they do a variance computation at the end here. Oh, yes. And then they do a plant-wide rate also. When we get back on Monday, this is the teaser, so that you come back for more. We're going to do right into problems, problem 40 on Monday. We will also, I will give you time to work on your Cengage homework. Yay! I'm trying to get you more here to do the work here rather than home. Because again, so many of you are so busy right now, and it's nice to do your homework here if we can get it done. So count on, I'm looking at least half of the class, because it's a 3-hour class. We'll do some more problems, get your feet wet again, and then I'm going to let you do your homework on Monday.
Awesome.
Okay, have a good, safe weekend, guys. That's it.